Good morning, good afternoon, good evening, depending where you are on the planet, and welcome to the Tuesday, the 14th of January, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. We're going to go for our usual run through here today. It's going to be a fairly brief webinar. It's not a huge amount to highlight on top of what we highlighted yesterday. Have had some decent price action, though. So we'll run through what we've got coming up on the calendar. We'll take a look at the macro fundamental, geopolitical, central bank events that are shaping financial markets right here, right now. And we'll also take a look at the charts briefly. So not too much to really go through on top of what we covered a lot in yesterday's webinar. The main focus going into today is going to be Williams speaking. So no real, we do have PPI, but PPI not hugely significant. Remember, we get CPI tomorrow, which is hugely more significant. So unless PPI is significantly out of line, then it usually doesn't have a significantly large impact on markets. But nevertheless, we're going to be watching that. So first of all, PPI out in just under 1 hour's time. So we will keep an eye on it, but usually not a big mover of markets. Then we get Williams speaking at 3:05 today. Williams speaking at 3:05. So we'll be watching out for that. That was Eastern time. Just a reminder, we do get earnings reports kicking in as of tomorrow. So that'll be before the bell. So before our next webinar in here. Not sure it's going to be Duncan or myself on the webinar tomorrow, but we'll be picking up those. So they may have already come in when we start the webinar tomorrow, some of those. So JP Morgan, Wells Fargo, Goldman Sachs, Citigroup, Bank of New York Mellon. So all of those we're going to be watching going into tomorrow. Again, remember, before the opening bell, before markets open. And do remember as well, I mentioned there that we got, Williams speaking today. This week is the last week of Fed speakers before they go on their blackout period on Saturday the 18th. So the last week, we've got today and then 3 more days of Fed speakers before we go into blackout. Just looking at the morning briefing here today, not a huge amount. I think it's going to significantly impact onto the markets we're looking at in here, the equity indices. So Musk may be about to buy the US arm of TikTok. We have that going on. We have Trump. This was the big news yesterday. The reason the markets, obviously, when we were on the webinar yesterday, markets were already, and Nasdaq was down over 1%, I think. When we were on yesterday, we were about 0.8 down on the S&P, and we sort of went down and then saw a significant rebound yesterday. And that rebound was because of this. The Trump team discussing gradual approach to tariffs, increasing them by 2 to 5% per month, rather than to see a big leap. And then that's also to try to avoid inflationary pressures. So obviously there are concerns that the increase in tariffs and the potentially inflationary pressures coming from that could create, you'll see inflation rise again. And then that will put that's part of the reason we're seeing Treasury yields go higher, and that's part of the reason we're seeing then, we've been watching the Fed Watch tool, expectation now of fewer rate cuts. If inflation got to a significantly high level, we might be seeing rate hikes this year, rate increases this year. So obviously the Trump administration want to, and that could derail what they're trying to achieve. So we're maybe seeing a bit of a moderation on that. So that's why we turned around. We got that rebound yesterday, because that's seen as a positive for the markets, because it potentially allows the fewer inflationary pressures and allows the Fed to stay more dovish rather than more hawkish. So that's going to be super important if we get any further news on that. So we'll just have a little focus on that as we go through today as well. Another round of potentially dangerous fire weather coming. Stuff about Trump in here regarding whether he shouldn't have been convicted. It's all kind of water under the bridge, to be quite honest now. Bitcoin's value dropped 5% since the beginning of 2025. That's more to do with dollar strength than anything else, and stuff in here about cannabis cocktails. But none of this is really going to be a significant impact on what we're talking about. That's what I was talking about. The rising inflation ruined the Trump 2.0 agenda, even before it starts, increasing the risk of conflict with the Fed. It's priced for its rise over 4% over the next 12 months. Rate hikes and derailing much of Trump's growth rate. So that's what I was talking about there. Let me just pop that article out. And inflation could derail Trump 2.0 before it even starts. I'll share that one with you. I think that's kind of quite interesting to bear in mind. It sort of sets the backdrop of of what we're looking at. So if you do have a Bloomberg subscription, take a look at that. So if we go through what we're seeing, those are just the headlines there. But so stocks bounce and dollar slips, as you can see in here, and traders base for S&P 500's busiest CPI day since March 2023. So CPI is going to be significant today. Stocks bounce and dollar slips after the tariffs report. So that's what we spoke about. It's obviously positive for stocks, slightly negative for dollar. Treasuries, so the sell-off in treasuries pools didn't actually reverse in any way, and European equities rebounding in here this morning, and the futures are up this morning. Markets catch a break before inflation and earnings. We mentioned that inflation, remember, is CPI tomorrow, so I don't think we're going to see too many fireworks today. But even though we've got kind of a more of a negative outlook on the macro reports, the technical analysis reports from market chartists that were put out overnight, we've turned negative on those after the sell-off from Friday. But I do think there is a risk that we do get some kind of rebound, follow-through rebound after the intraday rebound we saw yesterday. Trump's team studies gradual tariff hikes under emergency power, so a plan will boost import duties 2 to 5% a month on trade partners. Supporters include Trump advisors, blah, 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 blah. So what it means in here is that, and we're going to be watching out for news on that. Obviously, the inauguration is not too far away now, next week, right? Yeah, next week. So it'll be interesting to see if we get anything on the run into that or, quickly after that. Dollar rises, but then we have had a slight setback in that after that news. And if we look to run round through on the overnights in here, the Nikkei was actually further lower in here, nearly 2% down, but we saw a significant rebound, over 1% on the Hang Seng. If we look at European exchanges, though, this morning, significant rebounds in here. So the FTSE's little change, actually, in the UK. But if we look at the German DAX and the French CAC, DAX up 0.75% and the CAC over 1% up in here already this morning. And on the overnights on the US futures, in here, we're about 0.3 up on both the S&P and the Nasdaq as we go into the day, having had that intraday rebound yesterday. I'm not going to run through this in any great extent because we've not really moved much on this. It's pretty much January nailed on for no change in here. But if we go into like the middle of the year, we're kind of sitting at around 50-50 for a rate cut or no rate cut by July, and similar for the end of the year. So it's actually fallen now that only a 30% chance of no rate cut, and then we've got then basically 70% chance that you get at least one, and then we've got these two together at 70, but only a 30% chance of 2 rates. So the market is pretty much just pricing in one rate cut between now and through to the end of the year. So that's pretty much unchanged from what we were looking at yesterday. And bond yields, despite pausing in here, you see we just had a pause yesterday after that significant move higher that we've seen so far this year. Higher in yields, this is so we did pause yesterday, but you can see this morning already we're nudging back up to those higher yield levels, despite that tariff news that we got yesterday, which should see yields lower and bonds back higher in here, but we didn't really get any kind of real reaction. And bond markets in here just these were written obviously last night and just staying bang on the lows. So right away across the yield curve in here, we're seeing it very negative. And obviously after the employment report, we saw a big breakout. 2 year, the shorter end has been hanging in, and like 2 years and 5 years hadn't really broken down, but we saw them broke down since last Friday and continue lower. And so this, obviously, the short end is far more reactive to what the expectations on the central banks, and we see that in the FedWatch tool as well. We look at the equity indices, though. We do have a succession of lower highs and lower lows in here, lower highs, lower lows, looking at since December. So we've got two lower lows, and they're like effectively almost like three lower lows, and now two lower highs. So that's significantly signaling a topping pattern, a more negative tone. But that intraday rebound, so we do sort of stay negative in here, that partially recovers intraday losses. We've got in here, and early drop faded, but pressure still tilted bearishly. So we've got a kind of the outlook for the next few days is certainly still negative in here, but that intraday rebound yesterday, it's formed a strong hammer pattern. So here we are on the ES, the S&P. So the market, you can see rebounding from just ahead of this low in here. So this low from back in November is 57.84. So we're rebounding just above there yesterday, coming off of 58.09, and then a strong hammer pattern. Now that should point higher going into the day. I mean, I don't think it's got much higher, and we've obviously already had a significant rebound. It's faded already, so it's going to be quite interesting to see how we go into the day. If we go and look on the 30-minute chart in here, the fact is that that acceleration lower. So we've got these more gradual topping lines, these like downtrend lines like coming say through like here. Da, 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 da. So you got this one. We're a long way from that. So the market's really still in this more negative theme. So we could rally all the way into here, and it still stays negative on like a 2 to 3 day outlook. But and then we've had this obviously strong intraday rebound. It's faded a little bit in here, but I wouldn't be surprised now if the market's going to focus in. Where's my thing gone? It does this just randomly. Sometimes disappears. Right, here we go. Looks back again. But this more accelerated trend line that comes down through here. So if we need to get above there, I think for me to start spinning a little bit more positive today. So not only above the high we've got so far on the ES, so the high today is 59.13.5, but that trend line's coming in up at around 59.33. So I think it needs to get above there, like 33.35 kind of area to start to ease bearishness, and then maybe up to like 59.60. Otherwise, the risk is back in here, right? It's kind of had this rebound yesterday, and it could easily fade back lower. So we're staying negative, but if it does clear today's high, as I say, 59.13.5, and then up through that trend line, which is I've got 59.33. That trend line, by the way, drawing off of these two peaks in here from the 6th and 7th of January. So if it can clear above that trend line, then it starts to look a little bit more positive in today. So I've been watching that one there. Similar story for the Nasdaq. The Nasdaq again kind of got this hammer pattern. It come off just above this low in here again from. I think from November. Where are we? Where's that low from? Yeah, November 19. And that low there coming in. Why is it not showing on my data box? Why is the data not in there? That's not good either. Anyhow, that low is around 26.30, and we've rebounded yesterday from around I can't see the actual number, 26.92. But then if we zoom in onto the intraday, so I think in here, you got this kind of more this trend line that comes off the top in here. So this line that comes all the way across here. We're a long way getting anywhere near that, and then you could also this is the same one as we got on the ES, and we're some ways away from that and already fading. So up above yesterday's high, I think it's going to be a minimum. We've got a little level. We've got yesterday's high 21. This morning's high 21.143.75, or the overnight high is there, and then you've got this little level in here. So that little peak there is 21.176.5. I think it needs to clear that area there. So basically 21 like 50 through like 80. I think it needs to get above there, and then ultimately through this trend line, which is all the way up here, which is similar to this peak up here. So ultimately, I think it needs to get above that peak there, which is all the way up at 21.372.5, to actually start to ease the bearishness. Otherwise, the risk is that we roll back down lower in here. I don't think it's going to be too many fireworks today. We do have PPR, we do have Fed Speaker Williams. We are watching out for those, but it could be a bit of a quieter day today than yesterday. Obviously, we had that tariff news yesterday. If we get any kind of more news on the tariffs, then obviously it could be we could see significant moves. And 2025, I think it's going to be really about watching the CPI numbers, and it's going to, which obviously got the first one coming up tomorrow, and then watching, obviously been in the markets a long time. And for those of you who are trading back when Trump was in last time, it was all about what he was tweeting, which was often, very often at the very end of the US day, often in that hour that the US futures are closed. He would tweet something, wherever it be about China, or tariffs, or whatever it might be about, and so that can add super increased volatility in the market. So that's what we're going to expect as we go into this year, and we could even be seeing obviously a lot more of that sort of thing coming out from Musk as well. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and Duncan or I will be back with you with another Bull versus Bear webinar on Wednesday ahead of the CPI data. Take care. Bye.